Hi everyone, welcome back to the Family Trader. Today, we're diving into a topic that's sending shockwaves through the market right now: tariffs. With the latest round of tariffs targeting imports from Mexico, Canada, and even China, there's a lot of debate on how this will impact global trade, inflation, and most importantly, your trading strategies. Historically, these tariffs has caused market volatility, but they also create massive opportunities if you know where to look. So in this video, we're going to break down what's happening, which sectors are most at risk, and the key charts you should be watching to stay ahead. Let's jump in. What are tariffs and why do they matter to traders? Let's start with the basic. Tariffs are basically taxes imposed on imported goods, often used as political or even economic tool. Right now, the US just announced a new 25% tariff on Canadian and even Mexican imports. It's covering industries like auto manufacturing, energy, and agriculture. Meanwhile, Chinese goods are facing additional tariffs as part of an ongoing trade dispute. We're talking maybe 10% or so. For traders, this isn't just about the policy, you guys. It's about how these markets react. Tariffs impact supply chain, cost structure, and international trade flows, all of which can drive volatility in these key sectors. For example, let's look at the automotive sector. Companies like Ford, General Motors, and Tesla, they rely parts imported from Canada and Mexico. Say if tariffs increase the production costs, these companies may either have to raise prices or see their profit margins shrink. That uncertainty right there creates the price swings, which can create opportunities for traders like us to play short-term moves or even apply some option strategies. Let's take a look at a Tesla daily chart, for example. You can already see it's down 20% since the news. I'll be looking into the next dip to buy. The same goes for agriculture stocks. With Mexico and Canada threatening tariffs back into the US imports, farmers could face reduced demand for their crops like soybeans and corn. That could impact stocks like Archer Daniels Midland, stock symbol ADM, which already been down 25% since the news, and Deere & Co., stock symbol DE. It's been driving up commodity prices. How these tariffs impact the economy and market trends, you guys. Tariffs don't just affect individual companies. They ripple through the entire economy. Here are three major ways they influence the market trend. 1. Higher consumer prices and inflation risk. If businesses pass higher costs to consumers, we could see inflation spike, something that the Federal Reserve watches closely. That means potential rate hikes or policy shifts. 2. Supply chains disruptions. Mexico is one of the US top trading partners, particularly in auto and electronics manufacturing. Say if tariffs hit, these companies may have to reconfigure supply chains, delay productions, and increasing costs. 3. Retaliations from trade partners. Canada has already hinted at a counter tariff on US steel and aluminum imports. If trade relations worsen, expect volatility in these industrial and material stocks. For traders, this uncertainty presents opportunities. If inflation rises, traders often hedge with commodities like gold and silver. Meanwhile, industrial stocks, which rely on raw materials, could experience sharp price swings. Let's take a look at how gold futures react to this previous tariff dispute. Notice the upward spikes here? By the way, as of a day ago, gold hit another market all-time high. US Steel, ticker symbol X, skyrocket to the moon as well. That's traders moving towards safe haven assets right there. The key charts and indicators to watch. To make informed trades during the tariff-driven volatility, here are three key charts to monitor. The SP 500, SPX. It tracks the overall market sentiment. If trade fears escalate, expect increased volatility. The US dollar index, DXY. A stronger dollar makes the US export more expensive, potentially hurting trade-heavy sectors. Bond yield. The 10-year treasury, for example. Inflation concern could drive bond yields higher, impacting interest rate sensitive stocks. Let's take a closer look at the SP 500 recent movement. After the latest tariff announcement, we saw a dip as investors reacting to this uncertainty. If these tariffs continue to escalate, watch for more downside pressure or even a sector rotation into defensive industries like healthcare and consumer staples. Meanwhile, in Forex market, the Mexican pesos and the Canadian dollar are already reacting. The strength of the US dollars compared to the Mexican pesos and the Canadian dollars has hit its all-time high. If tariff hurts exports, we may see downward pressures on these currencies, presenting in Forex traders with short selling or hedging opportunities here. If you want to learn how to track these trends in real time and make more confident trades, that's exactly what we teach here in Exit for Profit program. Whether you trade stocks, Forex, or even options, we give you the tools to analyze the market movement events and execute smarter trades. Check it out if you want to take your trading to the next level. All right, traders, let's recap. Tariffs aren't just a government policy. They are market-moving events that can impact industries, currency values, and inflation. Today, we cover what tariffs are, how they affect the US, Canada, and even Mexico, and the key indicators you should watch. Now, I want to hear from you. Do you think tariffs will impact long-term on the market? Or would this be a short-term shock? Are you positioning yourself for these moves? Drop a comment below and let's discuss. If you found this video helpful, don't forget to like it, subscribe, or even turn on notifications so you never miss an update from me. Until next time, stay informed, stay strategic, and trade smart, you guys.